Hello everybody. In this session we are talking about budget function. A budget function is a way of classifying and organizing the spending and revenue activities of a government, business, or individuals. It helps to identify the main purposes and goals of the budget, as well as the sources and uses of funds. By using a budget function, one can compare and evaluate the performance and efficiency of different budget items and make informed decisions about resource allocation and management. There are several reasons why a budget function is important for any entity that operates with a budget. Some of them are the first. It provides a clear and consistent framework for planning, executing, and monitoring the budget. A budget function helps to define the scope and objectives of the budget and to align them with the strategic vision and mission of the entity. It also helps to track and measure the progress and outcomes of the budget and to identify and address any gaps or issues that may arise. Second, in the context of an individual, the budget function is a way of categorizing the personal income and expenses according to their main purposes. For example, the budget function of housing is for the income and expenses related to the rent, mortgage, utilities, and maintenance of the residence of the individual. The budget function of transportation, for example, is for the income and expenses related to the car, bus, train, or other modes of travel of the individual. The budget function of education is for the income and expenses related to the tuition, fees, books, and supplies of the individuals. Thus, it facilitates accountability and especially it is the facilities to the transparency of the budget. A budget function helps to communicate the budget information to the stakeholders such as the public, the employees, and the regulators. It also helps to ensure that the budget is compliant with the legal and ethical standards and that the budget activities are subject to oversight and audit. And then we move to the functional of budget. Functional budgets are associated with the functions of an organization. Types of functional budgets are the first, sales budget. This budget is based on estimated sales during the budget period. It is also known as the backbone of the organization. The sales budget is the starting point for budgeting. All other budgets are based on the sales budget. The sales manager is responsible for preparing the sales budget. The procedure for creating a sales budget begins by obtaining data for past sales. These data are used to forecast future sales values. In turn, a production budget is devised based on the sales budget. Once the sales forecast is finished, the next problem is to determine how much to produce to meet the sales budget. Second, master budget. This budget combines all functional budgets into one harmonious unit. The master budget is a summary plan of the proposed operations developed by the management for the company covering a specific period. It is a summary budget incorporating any functional budgets that have been finally approved, adopted, and implied. The types of information included in a master budget are details relating to the sales budget, production budget, cash budget, and the other main functional budgets. When the master budget is complete, the budget committee will review its details and, if approved, it will be submitted to the board of directors. The production cost budget. The production cost budget provides a detailed overview of the estimated cost of carrying out the production plans as per the production budget. It represents the cost of various elements involved in production, such as materials, labor, and overheads. The costs can be expressed based on each product or based on each department. Fourth, cash budget. The cash budget represents the cash requirements of the business during the budget period. It compares the estimated cash receipts and estimated cash payments of the company during the budget period. It ensures that sufficient cash is available when required. Fifth, purchase budget. The purchase budget is concerned with purchases for the period of the budget. It is referred to the purchase of new materials, raw materials, fixed assets, and services such as electricity and gas. The main objective of the purchase budget is to establish a plan that will allow all purchases to take place at a minimum cost. 6. Capital expenditure budget. This budget indicates the plans for further capital expenditure like acquiring fixed assets, improving old assets, and replacing fixed assets. Examples include the addition of new plant or new buildings. And then 7th, labor cost budget. The labor cost budget lays emphasis on the labor needed to meet the company's demand during the budget period. The labor cost budget always focuses on direct and indirect labor costs. Labor requirements are specified by the Human Resources Department, which is responsible for recruiting, training, and promoting employees. And then promotion overhead budget. This budget represents the forecast of all production overhead to be incurred during the budget period. The factory overheads are classified as fixed, variable, and semi-variable. When preparing this budget, consideration should be given toward the level of equality that is likely to be achieved. I think it is enough for this session. Thanks for watching, and don't forget give this channel with your like, comment, subscribe, and share. Thank you.